Would a $1 million portfolio provide enough dividend income to retire? $1 million is a sizable amount of money, and it could even provide the money needed to receive a full-time income. It might be enough to fund your housing, transportation, travel, and all of your other living expenses, all while your capital continues to grow, setting you up for an even brighter future. The peace of mind that comes with seeing money deposited into your account when you're not working without the worry of market fluctuations can be reassuring. Getting paid to wait is hugely rewarding. Depending on what types of investments you own, you might be surprised at how much dividend income you would receive from $1 million. Watch to see how much cash flow that could produce and to find out how to maximize your profits. My name is Chris, and I help teach people about money, personal finance, and investing. If you're interested in improving your financial future, make sure to subscribe to the channel and hit the like button if this video is helpful. The amount of dividend income you will receive obviously depends on what types of investments you own, as they all provide varying dividend yields. Some investors buy a simple fund that holds the entire S&P 500. Some buy individual stocks that they've chosen because they think they will outperform, and some investors purchase a mixture of stocks and funds. Dividend yields will vary based on how aggressive your portfolio is, because growth stocks provide less income and more capital appreciation, while value stocks provide higher dividends and lower capital appreciation. Which you choose to buy should really depend on how long until you retire. Investing in just income and value stocks when you're young could leave money on the table, as their returns are generally lower than fast-growing companies. Dividend yields don't really matter to younger investors who are just trying to maximize returns. If you were to invest in the market or a fund that tracks the S&P 500, the dividend yield you would receive would be average because you're buying the market. Your overall returns from dividends and capital appreciation will be average. Although the S&P 500 holds many high-growth technology stocks, it also owns dividend and value stocks, which provide a combined dividend yield of around 1.5%. With $1 million invested in the S&P 500, that would mean about $15,000 per year in dividend income, or $1,250 per month. Dividends from most S&P 500 funds are paid each quarter, which would mean you receive $3,750 every 3 months. Even though the dividend yield is nothing special, the overall returns of the S&P 500 have averaged about 10% per year, meaning you have a nice balance of income and growth. Even if you were to spend all dividends received, you'd still become significantly wealthier year after year. In order to achieve a higher growth rate, you could invest in an S&P 500 growth fund, which holds the best growth stocks found within the index, companies like Apple, Microsoft, and Google, and little to no value stocks. This is ideal for people who won't be retiring for a long time, since the overall return will be higher than average, despite a lower than average dividend yield. Since most of the holdings are tech companies with little to no dividend, you'd only be getting around a 0.5% yield. With $1 million invested in this type of fund, you'd receive about $5,000 per year in income. That's only $415 per month, or $1,250 per quarter, but keep in mind that growth will be substantial. Consider the recent returns of these fast-growing companies. In just the past year, Tesla, Nvidia, and other stocks have seen their prices skyrocket, which far outpaced most dividend stocks. The dividend yield is only about 1/3 of the S&P 500, meaning you'd need 3 times the amount of money invested to receive the same amount of income. However, since the growth is so much higher, you could reach that number much more quickly. If higher dividend income is something you need to live, or if you're retiring soon and don't mind a lower overall rate of return, you might consider buying a fund that's designed to specifically provide higher than average dividend income. A good example of this type of fund is SPDR's S&P 500 High Dividend ETF. This includes companies within the S&P 500 that have the highest dividend yields. These are stocks like Iron Mountain, Simon Property Group, and US Bancorp. These funds almost always experience slow capital appreciation because the companies held are focused on generating consistent profits and income for shareholders instead of trying to grow. This fund currently yields around 4.5%, meaning you'd receive a $45,000 annual paycheck or $3,750 per month with $1 million invested. Investments such as this are better for those who currently need retirement income and are no longer in the accumulation stage. Another good option for those who don't mind doing substantial research is to purchase individual dividend stocks. Commonly, investors search for healthy companies that have a history of dividend growth and that have growing profit and earnings. In simple terms, This means that the company's share price is likely to increase as well as increasing dividend payments. A dividend stock that has a 10% yield but loses 20% of its share price is not a good investment. Unfortunately, many novice investors fail to realize this and are lured in by high yields, even though many of them are a result of a declining share price. What they should research is why the dividend yield is unusually high and if the company will be profitable in the future. Individual stocks are the riskiest option, but they also have the most potential. Share prices are always fluctuating for various reasons, which means it's easier to find a deal. In one case, a company might have had some less than desirable news and the market overreacted, allowing you to buy at a discount. The problem with only investing in funds is that deals are much less common because the price of each stock is bundled into one price, meaning they rarely go on sale. AT&T has been one of the highest paying dividend stocks in the S&P 500 for quite a while. The telecom and media giant handsomely rewards shareholders with dividends instead of reinvesting for growth. With a dividend yield of around 7%, that means $70,000 per year in dividend income with $1 million. That's significantly higher than even the S&P 500 High Dividend Fund. However, the share price hasn't risen much over the past 25 years. Ideally, you receive a comfortable dividend yield and the share price rises over time. One thing to look for is a long period of rising earnings instead of flat or declining profits. You also want to watch for a consistent rise in revenue, which means their sales are increasing every year. These things, in addition to other important metrics, will help you select quality stocks. If individual stock picking is too risky and time-consuming, you could simply buy sector-specific funds. For each sector of the market, there are funds available. The energy sector has a higher than average dividend yield. If you think the energy sector is going to perform very well in the future, consider adding money to a fund like Vanguard's VDE, which will provide an almost 4% dividend yield. The amount of dividend income generated from a portfolio of this size can be pretty nice for doing nothing. On the low end, you'd be receiving about $400 per month, but a proper dividend portfolio should consistently generate almost $4,000 per month, all for just waiting. Considering the average Social Security benefit is almost $1,500 per month, many people would be comfortable living off this amount. Investors can adjust their portfolio to achieve the right combination of growth and income so they can maximize their returns and future income. Some simple calculations will help you determine if you should invest more heavily in growth or more heavily in income stocks depending on how long until you retire. Dividend investing has become increasingly popular among the financial independence retire early community, and for good reason. Cash flow can help pay your bills, but you need to ask yourself if you should invest in income investments, something that will track the overall market, or growth investments that tend to outperform the market. A broad market fund like the S&P 500 might provide the right balance of income and growth. Consider the amount of income you might expect to receive from these different types of investments and your time horizon. This will help you map out an investment strategy that isn't leaving money on the table in terms of lost growth.